even through this, what we call crypto winter, the brands are still interested in this because they're thinking, okay, what this allows me to do, in addition to turning it to a tangible on the balance sheet, it allows me to have customer loyalty in a way that the alignment of incentives makes it a very powerful network effect, because your customers, by owning digital assets from your ecosystem, will appreciate in time, or they can accumulate more of them by being good community members, are now passionate behind your brands, much like kids trade Nike sneakers. So they're thinking, okay, this is going to make people more loyal, and we'll have a direct relationship with our community or buyers by doing this, and therefore we can collapse the costs of using middlemen like Google and Facebook, etc., at the middle too. So it's very powerful.
As noted by Raoul, institutions are still greatly interested in Bitcoin, regardless of the current crypto winter being experienced. Big institutions are increasingly being exposed to Bitcoin and other cryptocurrencies. This is important for several reasons. First, cryptocurrencies offer institutions a new asset class that can help diversify their portfolios and potentially generate higher returns. Second, cryptocurrencies are based on innovative blockchain technology that has the potential to transform various industries. By being exposed to cryptocurrencies, institutions can stay on the cutting edge of technological developments and potentially capitalize on new opportunities. Third, cryptocurrencies can provide institutions with access to new markets and customers, particularly in regions where traditional banking services may be limited or inaccessible. Fourth, cryptocurrencies can potentially improve the efficiency of institutional operations by reducing transaction costs, increasing transaction speed, and enhancing security. Finally, as cryptocurrencies become more mainstream, customers are increasingly demanding that institutions offer cryptocurrency services. By being exposed to cryptocurrencies, institutions can meet this demand and potentially attract new customers. Overall, being exposed to Bitcoin and other cryptocurrencies can offer big institutions a range of benefits, from diversification and innovation to access to new markets and improved efficiency. As the cryptocurrency market continues to evolve and mature, institutions that are not exposed to cryptocurrencies may miss out on these potential benefits. In his latest interview, Raoul talks about his latest thesis for Bitcoin and crypto in general. Before we listen to him, please smash the like button and subscribe to the channel if you are yet to do so. Thanks for watching our videos.
To understand this, I've been involved in this market since 2013 when I first saw Bitcoin. I wrote the first ever macroeconomic strategy paper and valuation for Bitcoin. So I've been all over this space. And the one thing when I wrote that first article is you need a 10-year time horizon. Everything else is done. And if you are worried about these cycles, you are trading it wrong. You're trading and not investing in the adoption of a network. So how does crypto work? Crypto is driven by two things. It's really simple. Network adoption, which is Metcalfe's law. So that's the number of active users plus basically the number of connections or applications for those users. That is what drives the long-term trend. The log trend of Bitcoin over time is the best performing asset of all recorded history, and it remains so in every single up business cycle. There is no asset that's ever performed as well. But it is cyclical, driven by the money supply and the liquidity cycle.
And the emotions.
And that's what brings it down 70 or 80%. So everyone goes, what comes down 70, 80%? You've got to remember that if I'm just looking at the Bitcoin chart now, the low in 2015 was $200. Then it went all the way up to $20,000. And then it corrected down to $2,800. All the lows are massively higher and the highs are massively higher.
Yep.
So if you just step back and say, oh, I bought crypto and it fell, hold it. Your time horizon cannot be 3 years. Your time horizon needs to be long enough for the network adoption model to work. And the best way of doing that is just using a log chart and looking at it within that. And it's a very smooth uptrend. And then what you do is you learn to use the down cycle, the liquidity cycle, to add to your investment over time, much like you would have done with Amazon, or you would have done with Google, or you would have done with Microsoft. They're very similar models. Don't forget, Amazon back in 2001-2 fell 96%.
Oh,
I don't think Bitcoin will be a payment system except using the Lightning layer for moving dollars around. It's fine if you're PayPal and you're in the monetary system because you give people a different product to use. But nobody wants to be the Bitcoin pizza guy and buy, a couple of books on Amazon for Bitcoin and then realize because the Bitcoin goes up too much over
It's too
time.
volatile.
So
Yeah.
it's too volatile to do that
Yep.
with. So I know it seems fancy. There is a Bitcoin and ETH economy, and you can get a share of that economy, and that economy can do very well. So, we take payments in ETH or Bitcoin or whatever at RealVision. That's fine. Some people want to do that because they've accumulated a lot of capital in those particular assets. But generally speaking, it's a bit of a red herring, I think, for that. Ethereum itself is becoming the payment system of the internet. It's very interesting because it is a base currency of which we quote things like NFTs in ETH itself. I've never seen that in my life. So my big thesis on crypto is I've started two companies. One is Exponential Asset Management. That's for investors to invest in digital asset hedge funds and other vehicles to get exposure to the space. So the financialization of the crypto markets, whether it's family offices, high net worth investors, pension funds, sovereign wealth funds, all of that. Science Magic Studios was the other side of that equation, which is I look at a lot of Web3 and it's being built from the grounds up. And they're all experiments. Some will fail, some will work. Great. But when I look at what Web3 does, it enables a bunch of really, really big intangibles on a balance sheet. Culture, brand, community, to become tangibles via tokenization. So I always use the example of Disney. Disney probably has the largest cultural brand on earth now. It might have been Coca-Cola in the 60s, but it's not now. It's Disney. What is Disney's brand, community, and culture worth? $1 trillion? $2 trillion? It's worth a lot more than the company is. Now, it's not realizable, but when you tokenize it, it creates that. Science Magic Studios' mission is to tokenize culture, these large cultural communities. Music, right? Music's one of the biggest cultural phenomena of human activity. Sports, gigantic. Fashion, gigantic. And then on top of that, entertainment, whether it's film franchises, book, TV, all of these things have cultural currency that can be tokenized. So the idea of that, we built an amazing team with some incredible advisors to go and talk the talk that needs to happen at boardrooms, not by a bunch of crypto heads with hoodies, but serious people to go in there and explain how we can unlock massive trapped value for these massive communities and drive forward this whole space.
Bitcoin and other cryptocurrencies have a number of potential benefits for institutions, including, number one, reduced transaction costs. Because Bitcoin transactions are conducted directly between parties without the need for intermediaries such as banks or payment processors, transaction fees can be significantly lower than traditional payment methods. Number two, increased security. Bitcoin transactions are secured by cryptographic protocols, making them difficult to hack or manipulate. This can reduce the risk of fraud and increase the security of institutional transactions. Number three, faster settlement times. Bitcoin transactions can be processed much faster than traditional banking transactions, which can take several days to complete. This can allow institutions to process transactions more quickly and efficiently. Number four, increased transparency. The decentralized nature of the Bitcoin network means that transactions are recorded on a public ledger, providing greater transparency and accountability for institutional transactions. Number five, access to new markets. Bitcoin and other cryptocurrencies can provide institutions with access to new markets and customers, particularly in regions where traditional banking services may be limited or inaccessible. Number six, diversification. Investing in Bitcoin and other cryptocurrencies can provide institutions with an opportunity to diversify their portfolios and potentially achieve higher returns. What do you make of today's video? Please let us know in the comments section. We would also appreciate your comments on what kind of contents you want to see on this channel. Thanks for watching.